The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the terrific Tuesday, the March 10th edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I am absolutely grateful for your presence here. But more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to send me an email, send that off early, and send that to steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. So we begin our day here with a sea of green. All the U.S. indices that we track, they're trading the upside. Dow, 194 points. S&P 23, 145 for the NASDAQ. Russell's up 19. Transport's 47, 153 for the semis. Gold's up $119. Silver's up $5. Light sweet crude back 10, almost $11. Natural gas off 6 pennies. 30-year Treasury up 8 ticks. Print out 116.16. U.S. dollar index pulling back. Does have a new profile that is forming, so it's likely to find support here very soon. Leading the charge to the upside, you've got Lumentum Holdings up $43. Vertex Pharmaceuticals 44. Azimil Holdings 42. KLA Corp up 34 and SanDisk 35. To the downside, Aplovian Corp down 28. Axon Enterprise 26. BioNTech 22. Intuit is off 21, and United Rentals down $21. So we got movers and shakers. Of course, yesterday, what happened? We had that spot VIX index generate a one-day rate of change that was below minus 10%. We just got to get the right page out there. What Steve ought to do? Did I do it? Yeah, I put up a green arrow out there. So when we have those spot VIX index one-day rates of change below minus 10% out there, they are typically an initiation to higher price signal out there. Now, the last one that we had, we just had a stall. That last one formed back here on March the 3rd. And the next day, really was just more of a stalling of price than anything else out there. Today, we've got some follow through. So we're going to take a look at, obviously, resistance levels inside the equity future contracts to assist us with where price may head to or where it is likely to run into resistance out there. So we got that signal. Not a surprise that we see a market rally. As we talked about yesterday, we also had the New York Stock Exchange, the advanced Klein oscillator, trade into the oversold condition level, which is minus 150. When you and I were looking at it, we were down at the minus 250 area. That oversold condition needs to be worked off. It could be worked off a couple of different ways. One way could just simply be a nice rally out of here, a little V-ish type bottom, so to speak, and the other could be a very choppy move. Don't know which one it's going to be. Wish I could tell you. If I could, I would, but I can't, so I won't. But we are still likely to get a rally. Now, it could be a bottom of significance out here. And what that means, when we get these one-day rates of change below minus 10%, these initiation to higher price signals out there, oftentimes what they do is they take us back to new all-time highs. Is that a possibility? Holy heck, yes. And we'll show you why. But first, we're going to take things one at a time out here. We also have, so we're going to looking for the spot VIX index to get to below the 50-day expense moving average for that certainly to unfold out there. What we also had, though, and the reason why there's that possibility that we do get back up to those highs out here is if we take a look at that ratio. Remember, when we have that spot VIX, it goes into extreme contango position. where it's traded above all forward future contracts. We then turn to the 3-month, 6-month, and 1-month VIX counterpart. That's what's at the bottom of the screen. We take a look at the spread or a ratio. And when those ratios or those spreads go above +1, that's when it starts getting interesting. Why? Because when it's above that level, it tells us when we close back below that area, we likely have formed a bottom. And now we've got it on the yearly signal, the 6-month signal, and the 3-month signal. The 6-month signal gave us the close below yesterday. Today, it's the 3-month and the 1 year. So I'll go ahead and decorate those charts with those bottoms. You can see the other ones out there. Pay attention. All right, these are signals. We are not looking at any kind of gosh darn news media BS out there, okay? I mean, those folks tell you stories about markets and as if they're just simply making stuff up out there. Not here. We don't do that. We just simply look at these signals and we're agnostic as to a certain extent, what's going on around us, because what's going on around us is what buyers and sellers are communicating to you and I out here. What else do we need to look at? So we're still just working off this oversold condition. As long as price remains below that zero threshold level, it is sellers that still have an edge, and the VIX is still above its 50-day exponential moving average. Let's not get too crazy out there. So sellers are the ones that still have the edge out there, and that's why we could easily see a bouncy sideways move out there. If we take a look at the seasonal historical cycle, a midterm election cycle, and we look at the S&P over a 98-year period, that gives us basically 24 touch points. Let's get rid of 2026 out there. Here we can see we are in this choppy market. Can we get to new all-time highs? Well, we got the signals that say yes, and we also have the pattern that says yes as well. And this pattern here, we typically get a rally that doesn't top out until the middle of April out there, and then we start moving lower in earnest. We get that 4-month type pullback out there. And that seems to be the pattern and the cycle that we're on at the moment. Let's go from here. Let's go take a look at Stevie's other charts out there. Let's go take a look on a daily basis, the resistance levels. Now, we did get A to B equals CD, a buy the D point bottom pattern inside the Dow equity future contract yesterday. We got it inside of the S&P future contract yesterday, the bullish piercing candle. When we did not get that inside the NQ just simply negated or it tested and rejected the bottom of its profile. It tested rejected 2 prior swing points. You kind of got everything. So when we take a look at the ES mini, everything to the upside. When we take a look at the ES mini out here, rally ought to take us up to that oscillator and change line. Current print there is 68.41. If we can close above that, we likely get into the sell zone. That's between 68.77 and 69.30. The NQ very likely to go target the center of its profile. We've been up there before. That's resistance at 25,473. We're trading above yesterday's high inside the NQ. We're doing the same thing right now in the ES, the YM, and the Russell 2000, all bullish signals. In the case of the Dow equity future contract, confirming another buy the D point bottom pattern yesterday, but now we've got a new profile. Support at 47,252, resistance up at 49,090. Price likely to go target its oscillator and change line, but first it must break through resistance, potential resistance, the center of its profile at 48,171. If it does that, we're up and away to 48,567. And finally, Russell 2000, also a new profile. 2566 is support, 2666 is resistance. Price likely to target 2615. You close above that, and it's off to 2666. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Let's get to the requests that have come in. The first one coming in from Jay, who is driving. So safe travels, Jay, this morning listening in and wants to take a look at the XLK. He's actually in TECL. That's a 3X ETF for the XLK out there. So we're going to take a look at the XLK because we get the better readings here. And his real question is really what's the outlook for the next small period of time out here. So here's what we know about the XLK. The very first thing on the bigger picture, the daily, weekly, and monthly all have tops. The daily and weekly are TD9 count tops. The monthly is a sell, the D point top. The question is, and what's transpired since then, is price moved into a consolidation pattern. It is shown on the daily time frame. You can easily see it on the weekly time frame as well out there. Price tested the bottom of the consolidation basically yesterday. Didn't get all the way down there. That's actually more of a bullish signal. Didn't get all the way down to the low of the prior swing point. And right now what price is doing is trading inside that bullish structure daily profile. So, Jay, where this is headed to is the top of its profile, 141.67. That's a level of resistance. I have no idea whether or not price will be able to clear that. On a weekly time frame, we have a new profile. And that weekly time frame's new profile resistance level is up at the 145.43 area. If price can close above 141.67 on a daily time frame, price ought to make its move up to 145.43. And that's probably where the rally would come to an end if, in fact, it's just a counter trend type of move out there. The monthly chart just shows us trading with inside its profile. Now, the interesting thing here on the monthly time frame chart, the question posed to ourselves is, do we have a bottom? Is the bottom in? Is getting back to the bottom of that consolidation, was that the bottom? Why would Stevie ask that question? I would ask that question because if you look at the monthly chart, we just completed in the month of February a 2-month decline. In bull markets out there, 2-month declines are typically all that is out there. You can get to 2 to 4. I'm going to open up the chart. You'll take a look at the bottom portion of the screen. You'll see a lot of 2-month declines out here. And this has taken us back into 2011. Oh, did we go back further? But we don't really have the time for that. But look at all of the retracement. Yes, we've had a couple of 4-bar retracements, but most are 2 or 3. So we're asking that question, is the bottom in? I don't know the answer to that question, but you are long TECL and don't know how long you've been in it. The only reason then I suspect that you would get out would be a close below the bottom of this consolidation pattern out there. And that's not what we're dealing with as we speak right now. So the best answer to your question, 141.67 is the next stop to the upside. Whether it can take that level out, I don't know. There's a swing point out here that transpired on February 25th. The volume, we're trading into it now. About 13.2 million shares. We haven't gotten up to it just yet, but we're trading towards it. We got 7 million shares today. The low of that swing point is 141.21. You'd love to see price close above that today because, well, that would be nice. So really, the close would be above 141.67. You got the volume, and that would then suggest, okay, 145.43 would become the price target. So, Jay, safe travels, and thanks so much for your request out there. GTE wants to take a look at Baidu out here, so let's pull that up on our screen. BIDU being the ticker symbol. Let's go see what that is doing. It's rallying right now into the top of its daily profile, 128.18 GTE. I saw a wave 7 bottom signal out there. So that's in. That's a letter G on my screen. If it goes above 128.18, you likely are to travel up to 139.88. The weekly time frame price came back, found support at its breakout level, TD9 count breakout level, 118.02. So that's a bullish signal. And suggests price should rally up towards the 139.88 level. So 128.18, that's the first place to watch. You close above that, you're heading off to 139, 141, maybe even 144 out there. You also want to take a look at XPEV. Let's get those charts up on our screen, see what they are doing. You got XPEV right now trading out at 1906. Looks to me, it's got a Rhodes momentum indicator bottom. It went ahead and confirmed that pattern back on the trade day of March the 4th. We're trading above a prior swing point. We're trading above profile resistance. The daily says I want 2084. The weekly says hold your horses. You're not going to get to 2084 until you can take out resistance. Resistance happens to be the combination of its oscillator and change line and the bottom of its profile, and they're both around the 1910-ish level. So this is why price has stopped where it is, dead in its tracks. But if you can close above that, well, it won't be dead any longer. It'll be heading up to 2084. No idea whether it can pull that off or not, but that's what XPEV is doing, GT. So thanks for your request. As always, Rahul wants to get in the game this morning. We're going to take a look at Alibaba first. And we've got quite a few. We're going to look at Alibaba, NVIDIA, Taiwan Semiconductor, Broadcom, JP Morgan, Goldman Sachs. Alibaba? Oh, I didn't put that down. So we're looking at it right now. So in the case of Alibaba, you're going to get a buy the D point bottom pattern. This TD9 count pattern is going to go away. And the reason is because we're going to likely close above the close of bar number 5 today. Likely. Don't know if that's guaranteed or not. What price is doing, though, we got this gap to the upside that would confirm a buy the D point bottom pattern, but price is running right up into its oscillator and change line, Rahul. So this is the level that price must close above 138.24 in order to suggest that we've got further rally potential. Now that further rally potential, we have resistance at 140.06. In fact, we have a sell zone on the weekly time frame between 140.06 and 147.57. Therefore, being your pilot on this flight out there, I'm going to ask that all passengers put on the fasten seatbelt sign because we're about to hit some turbulence out there. That turbulence is between where we're printing right now and that 147.57 level out there. If you can clear 147.57, you're on your way to the 163.37 level. That's the daily TD9 count breakdown resistance area out there. That's what's going on with Alibaba. Let's go take a look at NVIDIA, NVDA. Let's go see what that is trading at. This is trading, I know, in a long-term consolidation pattern. At least it was. Oh, it still is. You can see that consolidation on the daily time frame. Now, the beauty about today is we're trading back inside its profile. That means above 182.76 and above that red oscillator and change line. Now, if it was a green oscillator and change line, Stevie would say this is headed to 189.80. It's a red oscillator and change line. It may be heading to 189.80. Not as strong as green, but a further rally, more likely the more likely the situation, maybe another 2 days out there. They give us a 4-day rally to the upside with that target being 189.80. The weekly time frame chart shows price consolidating with inside its profile. The consolidation range 172 to 191 out there. Just that's really the consolidation pattern. You got a daily top, a weekly top, a monthly top out there. Has it bottomed? That I don't know. That's the question we're asking. But right now, doesn't matter because NVIDIA ought to rally up towards that 189.80 level. The next request, Taiwan Semiconductor. We'll get those charts up on our screen, but likely we'll do the review when we come back from this next breakout here. Right now, we've got Taiwan Semiconductor trading at 351.20. It's trading below the bottom of its daily profile. This will be day number 2 of a rally to the upside, likely to go target the bottom of that profile, 359.64. Now, if it's only a counter trend move, TSM, Taiwan Semiconductor would find resistance between 359.64 and 366.43. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the charts up here for the MAG 7. MAGS is the ticker symbol for its ETF yesterday, forming a Rhodes momentum indicator bottom for its daily time frame. That was joining the weekly Gartley buy pattern that actually formed 4 weeks ago. That bottom is still held. That's the February 20th candle that generated that bullish piercing pattern. Now what we've got is price trading with inside a profile, both the daily and the weekly time frame. Now the daily is a bullish structured profile, and it closed today above 61.77. Increase the odds, move to 63.82. However, you got resistance on the weekly at 62.79. That's its next area. And you've got really more of a sell zone, so to speak, between 62.79 and 64.23 out there. So once you get past 62.79, that's when things are going to get a bit bumpy on the trade inside of MAGS. Rahul wanted to take a look at Broadcom. AVGO is the ticker symbol. Let's get its charts up on our screen out here. See what Broadcom is doing today. Traded above and closed above the top of its profile yesterday, and testing a prior swing point. But let Stevie pull this daily chart back, see if that's any swing point of importance. Don't know if it is or it isn't. You've got really several swing points out here about at this level. In fact, what you've got is, I'm just going to get rid of the A to B equals CD pattern here to the downside. I'm going to put in a little trend line out here, just kind of see where we're at on that. See if that's even relevant. Yeah. Sure is. So you got Broadcom this morning, Rahul, running right up into a trend line. So it's above the top of the daily profile. That's a bullish signal, but it's got to clear this trend line where it's at out there. But it can't clear the trend line. It can't bust to the upside. It tries to bust them to the downside. For me, that would mean pulling back to test the top of its profile, 339.99. When I look at the weekly time frame chart for Broadcom, price has gotten up as it was testing the top of that descending trend line. The weekly was testing basically the top of its weekly profile. And its oscillator and change line, that's up into 354.39-ish type area out there. So what Broadcom needs to do, it needs to clear its weekly oscillator and change line, top of its profile. The exact number right now is 354.40. If price is able to close above that, then we're off to the 392.72 level. The daily time frame says we've got to clear that descending trend line in order to rally further. Otherwise, we probably pull back for a day or two and test support 339.99. That's what we see when taking a look at Broadcom. Let's go take a look at JP Morgan, JPM being the ticker symbol there. Let's go see what she's printing out at, which looks like about $2.90 and 70 cents out here. So we've got this trading below its daily profile. It's got an A to B equals CD pattern to the downside. It does not look like to me that it has completed the one-to-one price projection, but I could be wrong on that. Oftentimes am. We're going to find out just simply by slide. Oh, I was way off based on that one. So it has at least attained the one-to-one A to B equals CD. What's missing here, though, is a bullish reversal candle. All right, that pattern hasn't confirmed. What pattern has? Well, let's just say thanks to Basil Chapman, because it's got that wave 7 letter G signal at the bottom, and that's going to confirm today. We're trading above yesterday's high. JP Morgan ought to at least rally up towards its daily oscillator and change line. So that's the call here, 295.13. We're also right now trading back inside its weekly profile, so that assists with our move up to 295.13. And we're consolidating inside the monthly profile. Price range between 283.39 at support, 321.86 is the resistance level. So JP Morgan getting ready to rally up in that oscillator and change line. And a close above that ought to get us up to the bottom of the profile, 299.51. The next request, Goldman Sachs. Let's go see what GS is doing. GS trading out as we speak right now at $838.99 and trying to get back inside its daily profile. It has an A to B equals CD pattern on the downside. It too needs a bullish reversal candle, or so we thought. But when we take a Goldman Sachs, looks a lot like JPM. How does it look like JPM, Steve-O? Well, you got wave number 7. That's going to confirm today. We're back inside the daily profile. Price ought to gun for its oscillator and change line. So JP Morgan, just like Goldman Sachs, ought to rally but JP Morgan's target, 862.85 out there. You do have some profile resistance at 858.77, so put on your seatbelts as you approach that area. Now, if we can close above 862.80-ish or so, we ought to get up to 914.14 to 927.02. 927.02 is the top of the daily profile. 914, the center of the weekly profile. It's a bullish structured profile out there. That says if this is only a counter trend rally in Goldman Sachs because price was below its bullish structured daily profile for more than 2 consecutive sessions, that's where a counter trend rally would die. So you got to watch that 858.77 level like a hawk out there. If it closes above that, it ain't no counter trend move. And that's what's going on with Goldman Sachs. Let's put up ticker symbol BA. I think we looked at this one yesterday. I can't recall who it was for, but happy to look at it. We have a buy the D point bottom pattern that formed a couple of days ago. Today, we've got a test of a swing point. The swing point, which was from back on March the 5th, had volume of 7.2 million shares. Today, we've tested it with 3.9 million shares. That's a little bit too much volume for Stevie. That says we ought to be back down to test this. So you've got the TD9 count bottom pattern that's in there. You got the buy the D point bottom pattern that's in there. Which one's got the lowest level of support? Turns out it's buy the D point bottom pattern. If price were to close below 218.13, negates those signals and says we head lower. Otherwise, we've got a bottom on the daily time frame. We may have a bottom on the weekly time frame. How's that, Steve-O? Because price got back to the bottom of its weekly profile at 220.57. That can be a bottom, and since the daily has formed a bottom, that's what we're going with at this moment in time. We change our mind when the daily signal gets negated, and we get a close below that weekly profile level, because that could bring in the price point of 186.41. But before we could get down there, we'd be dealing with that monthly TD9 count top that is still in place out there that would take price back first to the 208.55 level, and below that 197.17. So BA wants to rally, but it's got to get rid of the sellers out there. There's just too much volume. You'd love to see it test and reject that swing point from a couple days ago, March 5th, down at the level of 218.13 and do a less than 7.2 million shares. So that takes care of all of Rahul's requests out there. Now we move on to Duncan Steve. And Duncan wants to look at Palantir, PLTR, being the ticker symbol. Let's go see what this is trading out at. We take a look at Palantir. You're trading out right now at 150.59 with inside its daily profile. I don't have any kind of a topping pattern out there for the daily time frame, at least on this current run. So perhaps price just simply run into resistance in that, hold on a minute here. Where's the top of the where? Stevie, hold on. Stevie needs a profile. Oh, that is the bottom and the center at 147.83. So on this retracement here for Palantir, watch 147.83, both the center and the bottom. Should have been strong resistance. It wasn't on the rally. Will it be strong support on the decline? I don't know the answer to that question, Steve. When we come back to this break, we'll finish looking at Palantir. Then we'll go take a look at Amazon and any other requests that have come in. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at the stock chart for Palantir. This is for both Duncan Steve and the Tigers Den, Rich in Oregon. So let's go back. First, this formed a daily bottom, Rhodes Momentum Indicator bottom, back on the trading session of February 23rd. It was that bullish hammer candle. Last week, we had a gap to the upside. That confirmed by the D-point pattern for the weekly time frame. In both cases, price right now is trading with inside profile. You actually like the action. We got up to, if the rally had enhanced, it continued, we likely would have gotten a daily TD9 count top. Now, the pattern is likely to go away today. It will go away. It'll cease if price closes below 153.19. We're at 151.01. Again, price is likely just to pull back to 147.83 and then resume its rally. It could pull back to the oscillator and change line as well, 141.97. The question is, has Palantir bottom? Well, we've got a daily bottom and a weekly bottom. And on a monthly time frame, we have a 2-month pullback. So we take a look at its cadence out here. We can see most pullbacks have been, once the early phases, they were 4-month pullbacks, pretty much normal. Otherwise, the rest have been 2 or 3. And as I said, we just finished a 2-month pullback out there. If price can close above its green oscillator and change line, that's at 162.14. I would say the answer to that question, the evidence would start leaning more towards yes, that Palantir has put in a significant bottom. So that's what's going on there, guys. Hope that helps you out. Dunk wants to also look at Amazon, AMZN being the ticker symbol. Let's get that up on our screen out here. Amazon consolidating with inside its daily profile. It's got a daily TD9 count bottom. Its resistance level is up at 218.73. That's where price should be gunning for. It's got a daily Gartley buy pattern. Resistance up at 217.18. That's where price should be gunning for. Going to have to put on your fasten seatbelt sign because that area is going to be resistance. If it can clear 220, 237, then we're off to the 233, 242 level. The monthly oscillator and change line is as well as the top of its profile out there. So Amazon ought to continue its rally as it moves up towards 217.18 and above that 218.73. Dunk, hope that helps you out. We're going to go take a look at the IWM. This one here is for Patty and Hector. And what they're looking at, I believe, is a daily by the D-point bottom pattern. And voila, it's there, most certainly. So yesterday you got that nice bullish engulfing candle. What price ought to do here, Hector and Patty, is it ought to rally up to resistance. Well, the first level of resistance is going to be the bottom of its daily profile, and that's at 257.83. If price can get above that level, then we'd be looking to move to its oscillator and change line, and that is at the 259.91-ish level. Above that, you're looking at the center of its profile, 262.01. And if you can clear that level, the daily says 268.96. Now, we haven't looked at anything on the other time frame charts out there, but I do see a 261.30 level. That is the beginning of its sell zone on the weekly time frame. So it looks to Stevie like you got a lot of battling going on out here. 257.83 being that next one, 259 in change out there, and then 261.30. So do you have a daily buy the D point bottom? We absolutely do. Did the weekly hold the bottom of its profile? It absolutely did. Is the monthly hold its green oscillator and change line after a TD9 count top that formed last month completes this month? Yes, it has. So what you just got to do here on the monthly time frame is get back above that day at monthly profile, and that number out there is 258.20. If you do that, it'll start pounding its chest. Doesn't mean that it's clear to run to the upside. It's got to take out its high out there. That's that TD9 count top. That's the price point at 271.60. Remember, we have that very bearish island top reversal candle for the daily time frame for the IWM. Pretty interesting about that. The question is, do we just have this nice little counter trend move? Are we really planning, as the S&P as an example, planning on making this midterm election cycle move where we make a high sometime right around April the 18th and move lower into about the September 28th time period? Don't know. But let's go check out the IWM. Let's put that up here for Hector and Patty. Let's see what we can find. Now, we're not going to have the same number of years worth of data. In fact, on the IWM, we've got 25 years worth of data. So we go to midterm elections and we turn off 2026. What we have out here is just simply 6 touch points. But here, what this shows us is that price typically rallies. This is the IWM, Hector, into when? That same April time period, and moves lower into when? That same time period, into the early part of October. So that really may be the pattern that's going on. That we've got nice counter trend rally. We got signals. Remember, we got signals inside of yesterday's move that we could easily see moves back to the highs. What were those signals again? Well, we had that spot VIX index. That was really the key one, where it was in such contango, trade above every forward future contract, that it has given us that buy signal for its 3-month time frame, its 1-year time frame, its 6-month time frame out there. And that's a chart that you're looking at right here. That, along with the New York Stock Exchange moving through its oversold condition, if this can get back above its zero threshold level, and then if the VIX can get down below its 50-day exponential moving average, which at 1952, then you'd have all the setup that you need to take us up to higher highs. But again, we're in a sideways, choppy consolidation type market out there. Let's go to our next request. No, that was the last request out there. Oh, how about that? Well, let me make sure of that. Let me have Stevie here just check. Raul, I've been through all of them. So if you're just listening now, you missed out. Just checking to see if we've got any other requests by phone. We do. GT wrote back in, and we'd like to take the Hang Seng. All right. Let's see, what's your next request out here? It's not a problem. Actually, I could probably just do it right here. Hey, just let me hold on a second here. The only problem is this is going to show profile levels. We're just simply going to negate the profile levels out here. I'm going to get a couple error messages because it really uses my other data feed for this. But because the market is closed, we ought to be able to get the info that we need with regard to the Hang Seng. So you can see there's the error request. Now, the Hang Seng has rallied, or is rallying, right up into its oscillator and change line. So an overnight action, what you're watching for here, GT, is the price point of about 25,997. That is the red oscillator and change line. If price can close above that, we ought to see a further rally. So that's what's going on with the Hang Seng. There's another email from you. That one is looking for NIO. So let's go put up NIO, see what this is doing. Your question is how far can it go? before earnings. Well, here's what I can share with you. It's got a daily Rhodes momentum indicator bottom pattern out there. Price is taking on a little gap to the downside out here, so it's closing the gap that had formed on the trading day of December 31st. This is a gap down with 83 million shares. Today you are up with 80 million shares already. That's a beautiful thing. So you are closing this gap. You're trading into that swing point that only had volume of 80 million shares. If this can close the day above 550, you ought to get it to 579. You're trading right now at 537. The weekly's got nothing that's stopping it from getting up to that 550, nor does the monthly out there. So it's really about the daily strength. You certainly have the volume behind the move. The question is, can it close inside that swing point? And if it does, likely to head higher. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got the charts for Ford up on our screen out here on a daily basis. You'd say, this would want to head lower out there. But if you look at the weekly time frame, price pulled back to its buy zone, and that's where it found support, Steve, and that's between 1160 and 1187. So on a daily basis, I don't have a bottom pattern, but we are trading above yesterday's high out there. You can see we hadn't traded above a prior day's high since that waterfall decline. So this suggests to me that we could easily rally up towards this oscillator and change line. That's right around the $12.90, $13 level out there, especially with the monthly also holding its oscillator and change line. So that's what we're looking at with regard to Ford. Very likely rally up towards the $13 area. Dan in New York City wants to take a look at Seiko Mines. TGB being the signal out here. TGB right now rallying. It's inside its profile. It has been trading within, I take that back. It's rallying up to the bottom of its profile. That's at 767. If you get back inside that profile, that would be a good signal out there where counter trend rallies would come to an end on TGB because price was below the bottom of a bullish structured profile for more than 2 consecutive closes. Counter trend rallies would come to an end. They die between 767 and 808. So you're looking for TGB to clear that 808 level. Right now it's 815, which is the daily green oscillator and change line. If you can do that, then you start moving up towards 891. The weekly time frame is trading above the top of its profile. So support on a move to the downside would be at about the 635 level. The monthly time frame, it has negated a TD9 count top. So it's really just waiting for the daily and the weekly to get its act together. And to get its act together, you've got to close above really profile resistance on the daily time frame at 891. So that's what's going on there, folks. Hey, stay tuned for all the great programming. And thank you for all those requests out there. Just made the show just kind of fly through the day. So have a terrific Tuesday, and I'll look forward to seeing you on wonderful Wednesday. Take care. Be safe out there, folks.